Hello and welcome to another episode of the LendAPI Partner Podcast. Today, my guest is Michael Luxenberg, who is co-founder of Bankuity AI. Welcome to the podcast, Michael.
Thank you very much, Rutger. It's a pleasure to be here, and thank you for inviting me.
Now, let's start off with how did Bankuity AI get started?
Rutger, I've been part of a team that's been immersed in growing lender profitability for about 2 decades. And no matter how sophisticated we or our clients became, there were certain opportunities that presented themselves where if we could figure them out, it could unlock huge growth for lenders. For example, with such sophisticated underwriting schemes, why were so many borrowers defaulting on their third, fourth, or fifth installment? And why were lenders turning away so many good customers that their underwriting models said would not perform, but in retrospect did perform? And how come no one wanted any part of the gig workers and the self-earners, such a growing part of the economy? So on the strong advice of the great Dave Speiler, who pointed out that we could be mining the millions of bank transactions that were going through our system, a treasure trove, Rutger, of alternative data, we set out to become the experts in understanding how that data could bring enormous value to lenders. And once we started researching it, there were some unbelievable trends that jumped out. For example, the applications contained a ton of errors. 85% of the applications had some sort of mistake, either in the area of employer, income amount, or income timing. Plus, the bureau data, which is supposed to contain all of the loan history, so important to an underwriter, was really incomplete. And we noticed that there was an additional 30 to 40% more transactions contained in customers' bank data than what existed from bureaus. And then these underwriting databases that lenders were using were missing out on the rich information, trending information on income and spending that could unlock so many opportunities for lenders. So from there, we realized that the lending industry really needed new technology that could leverage all of this alternative data, that can decode every single transaction, even ones very difficult to decipher, and pinpoint exactly where lenders can make more money. So we created a new technology called ABV, Advanced Bank Verification, and Bankuity was born.
Wow, 85% of transactions not being accurate or there being some mistake. That is quite a bit, and I can see how you can put some technology in place to do better there. So that is a great story how you got to where you are right now. Now today, what is the number one use case that you solve for your customers?
The number one use case, Rutger, is using Bankuity as an AI profitability companion over the full life cycle of the lender-borrower relationship, from the time of application to servicing the loan, to collecting when payments are in arrears, and retaining that customer once they've paid in full and they need a new loan and you want to prevent them from going to a competitor. You want them to come back to you. At the application stage, take on customers you never would have taken before, because now you have such a deep understanding into the customer's financial wellness. Lend to the right customer at the right amount and at the right payment schedule. At the servicing stage, receive alerts if any scheduled payment is at risk due to changes in the customer's financial wellness. Sometimes the financial wellness will increase, and therefore you can increase the line out to the customer if it warrants it. At this stage, Rutger, at the servicing stage, ABV technology can also detect something called customer churn. That's when a good paying customer is showing a signal that for their next loan, they may go to a different lender, a competitor. At the collection stage, Bankuity will notify you exactly when the right time is for that borrower to make a payment and fulfill what they owe. And at the retention stage, after the customer is already paid off, be aware of when they are going to be in the market for a new loan. Predict when that will be. So you can communicate with them in a very, very precise manner.
Yeah, I really love that. Like throughout the life cycle, use lots of data insights to actually do the right thing at any point in that life cycle. That's very powerful.
Exactly.
Now,
Exactly. Thank you.
Can you tell me what your favorite customer story is, Michael?
Rutger, in the lending community, sure, lenders want to be profitable, but they are also taking huge risks and they want to feel like they are helping their customers with their day-to-day needs. So a senior executive with a large, sophisticated lender tells me that they want to become more inclusive in their lending. That's not something you hear very often, Rutger. You might hear a lender say, I want to grow, I want to become more profitable, I want to be more compliant, but it's rare that you hear them say, I want to become more inclusive. So I say, what do you mean by that? And the individual says that they have so many exclusions in their underwriting in order to contain their risk, that they're leaving behind borrowers that truly need funds and have nowhere to turn. And it's true, because hardworking people are always being turned down because their income is too low or they're not on payroll. And our product is really built for this. Your income may be lower than somebody else's, or it may come in a regular fashion, but you might have very responsible spending and borrowing habits. And because of that, your financial wellness might actually be better off than someone who has higher and more typical income. So we were able to bring the solution to bear, helping the lender grow by taking on new customers they wouldn't have taken before, and do the right thing by becoming more inclusive.
That is an amazing story to see how you can help people that don't necessarily fit the traditional box, but based on your technology, you're able to identify those people that are deserving and will actually perform even for a lender to make sure that they can still, at the end of the day, lend out that money and get it back.
Well said, Rutger. That's exactly the point.
Well, that is probably a great note to end on. A satisfied customer that you were able to help be more inclusive by leveraging data and by doing the right thing at the right time. So we really appreciate you being on the podcast. And thank you so much, Michael.
Thank you very much for having me.
Now, this was another episode of the LendAPI Partner Podcast. We will see you next time.